Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session, where we saw strong gains across the board with the NASDAQ in the lead.
Yeah, more earnings reports in focus. We had a couple of pieces of good economic data before the open. So another good day for the stock market. We'll take a look at a biotech ETF on a strong day overall for biotechs. Take a look at grocery outlet, ticker GO, which is getting support again, and LPL Financial, maybe a lone wolf in its industry group, but pretty good earnings report and price gain today.
Great. Well, analysis on those charts coming your way. But first, let's take a look at the major indexes. So the NASDAQ up a strong 2.6% today, followed by the S&P 500 up 1.7%. Same for the Russell 2000, maybe slightly behind the S&P in terms of the percentage gain today. And we also had the Dow up 1.3%. So really picking up steam throughout the day here, and the NASDAQ especially finishing quite strong.
Yeah, we were kind of looking at those February, March lows way over on the left of that chart, 12,587, 12,555, and you can see the NASDAQ kind of punched right through those levels today. So again, this brings a possible trip to the 200-day moving average into play. Yeah, pretty good volume on the NASDAQ. Strong earnings from PayPal helped fuel a nice rally in fintech stocks, and then you had a lot of your large cap tech names like Apple had a great day holding above its 200-day moving average. So Nasdaq continues to act well here.
And let's also take a look at where the S&P and Dow are in relation to some key resistance levels, the highs from early June. So it looks like the S&P is right at that level with an early June high of 41.77, closing today at 41.55. So even though the NASDAQ has cleared some hurdles, it looks like we still have that short-term hurdle to go for the S&P 500, Dow, and the Russell 2000 here, closing in on its early June high from the 7th of June here, Ken. But with the strong gains that we've had, it definitely feels like a character change. But, can we keep it up at this rate, I think is the question at this point.
I mean, I think indexes are at a spot where you would expect them to pause a little bit. You can see it's been a tremendous run over the past few weeks. And just looking at the S&P 500 chart here, you've got a one-day pullback, you've got a 2-day pullback. The market tried to pull back earlier this week on Monday and Tuesday, and really had a hard time giving up ground. So, like you said, we're kind of near that recent high of 41.77. So it would not be surprising at all to see just a little bit of a pullback here, to see the S&P 500 digest its recent gains. Energy stocks, S&P did pretty well today despite broad-based weakness in energy stocks, and there are certainly a lot of them in the S&P 500. So we're at a point where I think the S&P could pull back here and just kind of digest its gains. But as we've been talking about, you want to see these, pay attention to the volume when the market pulls back. You'd like to see, volume light to the downside, and then heavy to the upside. So that would be a healthy pullback. An unhealthy pullback is if we start to see violent sell-offs with distribution days, higher volume declines. But we've got a pretty light distribution day count in the big picture in the market pulse right now. Just one for the S&P 500. That's it. So the reason this rally has been able to work is just haven't seen a whole lot in the way of institutional selling in recent weeks.
All right. Well, we'll continue to take things day by day, but more positive signals. Potentially a pause here, but if we don't get that, Ken, it seems like investors looking to make new buys, because there were a number of buying opportunities today and interesting looking charts here. Does that raise the risk of being vulnerable to a pullback? I guess that's the tricky thing about trying to come off of this bottom here and seeing how strong of a move off lows it's going to be before we do maybe start hitting resistance in a more significant way, or at the very least, pause for more than just 2 days.
Yeah, listen. We know the market tide is flowing positive. We believe in buying stocks when the market tide is flowing positive, so we can put that in our back pocket. But again, it's been a really bullish move off lows, particularly over the past 3 weeks or so. So. It's okay to look for new stocks to buy, but when we were on IBD Live this morning with Mark Minervini and just talking about exposure in the market, I think there's a lot of us that want to increase exposure, but just the types of growth stocks that we like to see, it's still kind of slim pickings. We are getting some good earnings reports, and like I said, some good economic data. So if this rally is going to continue to work, you'd expect more and more buy prospects to emerge. We didn't add anything to leaderboard today. Just didn't see a whole lot compelling, but we're just kind of staying patient here, and if we do get a pullback, maybe for a week or two, that could present more setups.
Yeah, and to be clear, now is the time, especially over the last couple of weeks, to start putting some money to work, not diving in head first, but making sure you're managing risk appropriately. But testing the waters now is something that investors should be doing in case we do start to see this rally continue to pick up steam.
Yeah, testing the waters is fine. It's not like you want to go from 20% invested all the way up to 100% invested. If you see some stocks moving with volume, whether it's good earnings or a headline, or maybe it's just showing signs of accumulation, go ahead and nibble. But small position to start, and we do definitely the way the market is acting now. It seems that. The likelihood of a really harsh economic slowdown may not be in the cards, but we'll just have to see how that shakes out. Sometimes the market overdoes it to the downside, and sometimes it overdoes it to the upside too. So we'll just have to see. But certainly the market's is feeling a little better about the economy at this point, I think.
Okay, well, let's take a look at IBB, because biotech stocks had a strong day today, with this biotech ETF up about 3.8% on the heels of earnings from a couple of names in the group, some notable names, Moderna, Regeneron, and Gilead, helping boost this ETF here. So the biotech industry group has made a nice move off its lows, then went tight for a while, which, I think there was a question about whether, okay, is this rotation into biotechs short-lived and money flowing back into oil and gas? But it was actually, and we don't know if this trade will necessarily work out, but to see things go sideways and nice and tight offers a chance for investors to potentially get into this area of the market if they did miss that initial move off the lows, and a buy point shortly after getting it back above the 50-day.
Yeah, I think IBB still looks fine here, even after a 3.8% gain today. Closed a little bit off highs. You can see it crossed that recent high of 127.15, and it was a very orderly pullback when it ran from 104 up to 127. It pulled back. It really did not give up much ground. Found support at its short-term moving averages there, the 21-day, and a nice little breakout from a short consolidation today. Now the IBB does have that 200-day moving average to contend with, like the major stock indexes also have their 200-day lines to contend with, maybe in the not too distant future. So that could be at least a short-term ceiling for IBB. But again, the strong earnings reports, like you mentioned, from Moderna, Regeneron, Gilead. Tomorrow we're going to hear from two other top-weighted stocks in this ETF, Vertex and also Amgen. So we'll see what those numbers look like tomorrow.
And next on our list, let's take a look at Grocery Outlet, ticker GO. A nice move here today, albeit in light volume. We did get some volume to the upside coming into the stock yesterday on a marginal gain, but clearing a trend line and test of the 50-day line after an entry off of the 50-day line on the last quarterly earnings report. We have earnings coming up again in less than a week from now, but a notable move here from Grocery Outlet, also Ollie's, OLLI, a strong move today, up almost 7% by the end of the day. So even though we are in an economic environment where we're dealing with inflation, it seems like there are at least some pockets within retail and grocery, especially on that discount side, that this is a little bit of wind at their back and a bit of a boost in the current climate.
Yeah, no doubt about it. Grocery outlets, price strength has been very, very impressive. We go to the weekly chart here. And see that this is going to be the second test of the 10-week moving average. There's your first test right there. Great buy when it soared earlier that week. Yeah, just a nice solid heavy volume move off the 10-week line, and then the following week it barely gave up any ground from that move. So just finding support where it should. The weekly chart here, you might think that Grocery outlets made such a strong move from the 20 level up to 40, and that is a big move. But when you look at the sort of the big consolidation here, this one still could have a ways to go. So its earnings report next week will have a lot to say about that, but it is getting support where it should. If we go back to the daily chart, it was interesting. You mentioned volume, picked up on Tuesday. Volume was heavy, and the stock didn't really gain any ground, so it kind of churned a little bit. Not the best of signs, because you see volume pick up. You'd like to see a nice gain, but it really didn't move. And then today it moved in light volume. So I don't really know what to make of that, but it is getting support where it should, and I'm going to see what this company has to say next week when it reports earnings.
Mm-hmm. So we just have a couple of trading sessions between now and the earnings report, but there are some times potentially that you can get a profit cushion substantial enough to hold a relatively new buy into an earnings report. But I guess that's the gamble, so to speak, that one may decide to make if you are approaching earnings, but there is feasibly enough time to get somewhat of a profit cushion if this stock can continue to show strength.
Or you could consider an option, an earnings option. Maybe look at a 45 strike price and see where that premium is trading. Grocery outlet is it's fairly liquid in the options market, so this might be fodder for my my earnings preview column that I'll write this weekend. Maybe we'll take a look at what an option trade looks like for grocery outlet. So it could make sense, but technically strong headed into earnings, and we'll see what the numbers look like.
All right, and let's also look at LPLA, LPL Financial, in the investment broker industry group. Got that RS line blue dot on the daily chart, up 2.8%, volume behind not only today's move, but yesterday's price gain as well. So it's on pace for a gain of more than 3% for the week, which would be its third weekly gain in a row with this consolidation here, Ken. Your thoughts on the action?
Yeah, so you can see the revenue growth only rose 7%. That was a slowdown from the prior quarter, and revenue actually missed a little bit. So investors may just be looking at the annual estimates here for LPL Financial. It's near the top of this 16-week consolidation. I wanted to talk about LPLA as just, again, another stock. You just want to be very careful buying a stock that has run up a lot without much consolidation, and that's what LPL has done since hitting that low of 169. So it's at a point now where kind of similar to the major stock indexes, you may just get just a little bit of a pullback here, kind of the pause that refreshes. So that's what I'd like to see. I'm not a buyer here, but maybe if it can drift lower, form a handle just above the 200 level, that could pave the way for a good breakout. So but you can see the big earnings estimates here. This is a growth through acquisition company. They're not afraid about making acquisitions to drive growth, and it is one of the best performing stocks in the investment bank industry group. If you go back to the weekly chart, you can see some of the top relative strength stocks in the group, and there's not that many. Stone X SNEX is a pretty thin stock. It's got a good RS, but besides that, not a whole lot of leadership in this group. That's a yellow flag, but have to respect LPL for getting in position for a possible breakout here.
All right. Well, thank you, Ken, so much for breaking all of that down for us, and to everyone for tuning in. Thank you as well. We'll be back with more tomorrow morning on IBD Live. So make sure you tune in, investors.com/IBD Live, for all the details on that. And before that happens, coming up tonight at 8 p.m. Eastern, 5 p.m. Pacific, I will be on Twitter Spaces with Joe Fahmy for an interesting discussion about trader psychology and risk management. The two definitely going really hand in hand. But beyond that, some tools for your toolbox, but also Joe has been all over the biotech trade over the last couple of months, really before it started picking up steam. And Celsius, another stock that he's been all over in recent weeks. So I'm going to pick his brain about how he's uncovering this emerging leadership. So that'll be fun. Go on over to Twitter. If you aren't following me yet, you can check out my page at Alissa Coram, and you can get all of the details for tonight's space on Twitter. And it will be recorded, so we hope you check it out. So I'll see you there, and the team will see you back here tomorrow. Thanks so much for watching.